And we are live. Good morning and welcome to another episode of Money Matters only on onedealaway.com. I am beyond excited to be here with you on this beautiful Saturday morning. We're going to talk about all kinds of cool things, including, what's going on in the world when it comes to money. So we're going to address a bit about what's going on with the protests around the world, and I actually have a map to show you so you can see visually of where these protests are happening and understand that this is not just a US problem, this is a round the world issue. We're going to cover what's going on with China. As you know, that the U.S. is basically saying that we are going to delist many companies and stop doing business with them. And there's some conversations about potentially banning airlines and planes to coming from China to actually enter United States. So I think we're entering some sort of Cold War, and hopefully it doesn't turn into a hot war. But you never know with these things. And then finally, we are going to focus on your personal finance. We're going to talk about what's been going on in the banking sector when it comes to your bank accounts, business bank accounts, and the experience that folks have had, and how technology can actually help us all solve that problem. So if you are here to figure out of how you can benefit from all of these changes and discover what your next move should be, welcome to Money Matters. Let's do this. And good morning. It is a beautiful Saturday morning, and we're going to start off with this particular piece because, many people, including me, have been thinking and wondering about what does unemployment look like and what's been going on. And so out of RT, we are getting a bit of information and news as sort of what's going on. So U.S. unemployment rate not as awful as expected with surprising job increases. It is bad. It is really, really bad. And having well over 40 million, I want to say it's about 42 million or so people who are unemployed and have claimed for unemployment. And again, they're not all counted, so it's not 100% accurate because there are people that do not qualify for unemployment. So let's go through and kind of take a look at what they're having to say. So the U.S. labor market has made an unexpected rebound in contrast to earlier gloomy forecasts, with the economy gaining 2.5 million jobs as the country started lifting coronavirus lockdown. The federal unemployment rate dropped to 13.3% in May from 14.7% in month earlier, according to figures released by the Department of Labor on Friday. So that's yesterday. This is much better than the analysts expected, and it was feared that U.S. would have extended April's record losses with another 8 million jobs lost and the unemployment rate expected to spike to 20%. So, an interesting piece is that, I think the jobs have started, and there's a big war, so to speak, happening on Twitter between a few folks, where some people are saying, yeah, we've received all of these jobs and this is great. Look at America. We are, we're doing better. And then there's other people that are saying, yeah, but how these things are counted and how these things are reported doesn't always pan out, because when somebody's hired even to perform a job for 2-3 hours a week as opposed to 35 or 40 hours a week, they're counted as employed. But they're far from being able to do well unless, miraculously somehow their job is paying enough to cover, right? So if you could work for 2 hours a week and earn the same amount of money that you would working 40 hours a week, of course, all of us would want to do that. And so that's part of the struggle and the fight and the arguments that are happening. The other part that we're seeing is that the pay rate of what people are getting has actually dropped severely. And so whereas you would have gotten paid, X amount of dollars pre-crisis to what you can expect to get paid now, is vastly different. And I don't want to lie to you, but I want to say it was either 16% no, it was like 6.7%, I want to say. So test me, check me, verify the information because I can't remember 100%, but it's definitely down from pre-pandemic situation. So this is one of those things that we're kind of seeing, and you can see that President Trump has been tweeting, and there are different folks, like I said, engaging in an actual Twitter war about what's going on. Now, in the light of what's going on with the U.S. and around the world, we also cannot forget that there has been a rampant racism happening not just in the U.S., but I would argue around the world. And inequality is everywhere, affecting people of color, affecting women, trans folks, you name it, people will find just about anything, disabilities, visible and non-visible. So there's all these different discriminations that are happening around the world. And one of the latest things that we're all experiencing, especially in the United States, but also around the world, is fighting against racism. So there are protests around the world happening, and it all sparked, obviously, Minneapolis, as I'm sure you're aware. And the National Guard has been deployed in about 23 states or so to handle the demonstrations. And they're approaching it very differently from place to place. I read somewhere that apparently the National Guard in Atlanta did Macarena before enforcing the police hour. So, you get to see all kinds of different things. And I don't even know if you can see this. It's a bit on the tinier end. So let's make it bigger. There we go. You can actually read it. So outside of U.S., the protests have also erupted in many cities around the world. We've actually covered some of that over here. But let's really take a look at what's going on globally. So obviously large crowds have gathered in cities across Canada and in Mexico's capital, Mexico City, of course, throughout the U.S. We have big crowds happening in Brazil, in Rio, as well as Buenos Aires. Thousands of protests across several European cities, including Berlin, London, Amsterdam, Paris as well. So we've seen it everywhere. Sizable protests were happening in Nigeria and Kenya, and there are actually African Union issued strongly worded statements condemning the killing of George Floyd to U.S. embassies, around the continent. Middle East, Tel Aviv, Haifa, East Jerusalem demanding justice as well. And then, of course, in Asia Pacific, rallies were held in several cities across Australia and New Zealand. And this right over here shows you the map of the world. And you can see that the U.S. is rather large, but we are definitely seeing the protests kind of happen. You can see the Asian Pacific. There's Japan right here. We have protests happening in Middle East, in Europe, in Africa, and I think it is going to continue. I don't think that this is going to go away, whether we want it or not, and I think that is going to change how we, hopefully it's going to change, and I'm seeing already news reports around the world that some of the statues of during the colonialism and the Civil War and slavery and that kind of stuff, that streets are being renamed, statues are being actually taken down, and I think that that's a good move. I don't think we should ever change or forget history. I think we need to report it accurately so that we all remember of what has transpired and teach history in a way where all of us can learn from it. And at the same time, we shouldn't be glorifying successes that were made on the backs of people that had no voice, no say, due to militarization and blatant racism and discrimination. So I think it's going to definitely be interesting of where we're going, and hopefully, one can hope that we are going to move into a bit more just society where everybody can have a voice, everybody has equal access to education, ability to start a business, ability to be who they are, and not have to fear for their life or safety when they step out into the street. That is my sincere hope and desire, and I believe that all of us have a say in it by shifting how we think, And shifting what we say and shifting how we approach things and speaking out when we see things that we don't think is right. So there we go. That's kind of where I stand and where I feel. And now let's change the topics a little bit to understand of what's going on with U.S. and China. And again, this could be taken, obviously it's a geopolitical hot mess that we're all living through. But, it there are some potentially racial merits here as well. And I'm not saying it is. I'm just saying it is possible. And, my fear is that now we're going to switch from targeting, for example, individuals from African American community to targeting people that are of Asian descent. It's equal racism, slightly different skin coloration and tints, but equally as racist. So let's take a look at the stuff of what's going on. And again, a lot of it is geopolitical. My fear is just that it doesn't grow into something more socialized. But again, we'll see. And people are divided all over the place. As you know, U.S. has decided to blacklist some of the Chinese companies, many of them who might be listed on NASDAQ, and, prohibiting the trades. And there's a whole slew of things happening. And this is horrible timing for this stuff. I don't think that there's ever good timing to engage in trade war, to engage in sort of back and forth, tit for tat kind of stuff. But that's where we are. And as the world is attempting to recover from the pandemic and reopen and sort of restart the economic engine, we're seeing something like this that is very, very unfortunate, personally speaking. So let's take a look at what's going on because, China is not taking this sitting down, nor should they, I don't think. Again, I don't know who's right, who's wrong. I'm just saying from the business and economic sense, it doesn't make sense. And for me as an investor, this doesn't have any impact whatsoever. I think it's going to harm some of the investors, some of the traders, but whether I buy my stocks on Wall Street or I buy in Hong Kong or I buy in London, it's irrelevant to me. The world is a very global place, and with the rise of internet and what we're going to share about some of the FinTech of what's been going on and what is being developed, it's really the countries and the large pension funds and that kind of stuff that is going to suffer. Smart, intelligent investors and people watching Money Matters right here on One Deal Away are going to benefit. We are going to be just fine because we're going to switch from one provider to another, and people are not shy about switching. So let's go and take a look at what they had to say. So Beijing has blasted the addition of 33 of its enterprises to the U.S. economic blacklist known as the Entity List, promising to defend the firms and institutions' interests by any means necessary. New U.S. sanctions on Chinese companies, some of which the Trump administration sees as acting contrary to the national security, and others it has accused of human rights violation, took effect on Friday. So this is as of yesterday, y'all. And they set to block the sale of U.S. goods and technology to businesses on the list. Now, of course, we're seeing some reports that they're tech giants. They're like, yeah, forget it, man. We're still doing business. So you're going to see this stuff, right? Beijing would not hesitate to use whatever measures were necessary to resolutely safeguard the legitimate rights and interests of Chinese enterprises. The latest targets in the infamous economic blacklist include the major Chinese cybersecurity firm Keyhole 360, along with other tech suppliers, the bulk of which are developing the artificial intelligence and facial recognition technologies. And so this is one of those things that, it's very interesting. Is it that they're doing something wrong, or is it that we're trying to basically buy ourselves some time to catch up to the technological revolution that's been happening in China? And it's happening in the U.S. as well, but it sounds like it's been exploding in Asia, especially in China. And so, is that what the move is? I don't know. I am very curious to find out. Let me know what you think. Put it in a chat. Put it in a comment box. I'm curious to read what other people's perceptions are because mine might not be accurate. So, earlier in May, the U.S. extended pressure on China's tech giant Huawei. The company deemed a security threat by Washington has long been in the same entity list, prohibiting U.S. firms to doing business with it without special permission. The restriction may come as a huge blow, Beijing said, as a huge blow to U.S. tech giants such as Apple and Boeing, both of which were named among the targets to cutting their access to the lucrative China market. So basically, China is saying, you cut us out, we'll cut you out, and what are you going to do now? And, that just basically means that the business suffers. It may or may not have a blow to U.S. I mean, of course it does, because if you're a U.S. company and you're paying U.S. taxes and you don't make as much money, you don't pay as many taxes, and that has an impact on GDP and the income of the United States. And so, it's really interesting. And there's another article that follows the suit right here, but I think it's important to kind of read through it that, it's affecting the stock market. So they're saying that it's going to harm the U.S. economy. Trump administration seeks ways to crack down on Chinese companies, making it harder for them to trade on foreign exchanges. And so now, basically, they're saying that, hey, they have a pattern of fraudulent accounting practices, and we want to protect our citizens, and we, applaud NASDAQ for proposing to tighten listing rules on them. And they don't want the American citizens and investors to be subject to hidden undue risks associated with companies that do not abide by the same rules as U.S. firms. However, I do want to point out that we've already seen, and we've been covering it here, and I'm going to keep on bringing you stuff, and you see it from other channels as well. We do have U.S. companies that are taking advantage, blatant advantage of customers and individuals. They are, I don't want to say cooking their books, but they're definitely doing some weird stuff with their stocks and with their accounting to boost their prices of their stocks. And so, part of me is saying, yeah, China might be doing it, but so is U.S. I don't think that this is a Chinese thing. I think this has more to do with unscrupulous behavior of the different individuals and different companies. As financial markets have become another front of U.S.-China tension, more Chinese firms are considering listing on the Hong Kong Exchange. The CEO of Hong Kong Exchange and Clearing, which owns the Hong Kong Stock Exchange, expects that many companies will return to Asian financial hub due to U.S. political pressure. This is going to be a big year for IPOs, and today the atmosphere in the U.S. is becoming less friendly. Some of China's most valuable U.S.-listed companies have already announced plans to raise billions of dollars through a secondary listing in Hong Kong. As you can see, shutting them out of Wall Street doesn't really change much of anything for these companies. That basically just means I got to pivot, I got to shift where I'm listing my stuff, and you fill it out, you fill out the paperwork, you get registered, and off you go. So I think we're going to see a rise in different areas and different places of some of these companies. And, like I said, intelligent investors are going to shift, and they're going to go with companies where they can make money. So if that means that it's a Chinese company, it means it's a Chinese company. Hopefully, they're going to be a bit more transparent. Hopefully, every company is going to be a bit more transparent and utilize sort of the rules and regulations. And as always, I do believe that the onus is on us as investors to actually do our own due diligence, to research, not just to rely on the news report from the analysts, but for us to actually go in and take a look at the financials and take a look at fundamentals as well as the technicals of every company and every stock before we decide to invest and put our money in it. And I understand that for many people, you don't know how to do that stuff. Well, that's why you're here, and that's why I believe that education is the absolute best way for you to actually benefit financially. Because when you get educated, A, it's harder to fool you, and B, you don't have to rely on anybody to tell you anything, including me or anybody else on any channel whatsoever. You can do your own research, your own due diligence, and figure out what makes the most sense for you to actually preserve and grow your wealth. And that doesn't mean you have to go and get an MBA, okay? MBA is not going to teach you, most of them won't teach you about personal finance and how to do that stuff. They will teach you how to get potentially a better paid job in industry. If that is something you want to do, then, MBA could be a good deal. But if you're looking to improve your personal finances and you're looking to improve your own personal investing and stuff, there are plenty of the online places where you can learn, including One Deal Away, where within the academy you actually can learn all kinds of cool things. And you can definitely and absolutely check it out. But we're not the only company. I wish I could tell you that we are, but we're not. And different companies offer different things, and it is your responsibility and right to research all of them to make sure that they fit your needs, provide education that makes sense, and that they actually teach you something that is applicable and doable so that you can go out there and preserve your wealth, but also grow it. All right, watering break, and let's switch. So, since we're talking about personal finance, I figured it's only the right thing to talk about what's going on with the banks and banking industry. And so now we're going to start talking about the traditional banks, and then we're going to switch a little bit and discover some of the FinTech companies that are developing. Some of them are very centralized, right, in the traditional sense of a meaning from the business perspective. And then some of them are decentralized, relying on blockchain technologies. And this is coming from the DeFi or decentralized finance. So there's a lot of movement, a lot of development. Some cool and amazing things are coming our way. And it's just a matter of us watching channel like Money Matters, paying attention, and then switching to things that make sense. Again, not a financial advice, just something that I am absolutely looking to do and researching and considering do it. Because look at here. Banks took $11 billion, that's with a B, in overdraft fees in 2019. Okay? And here's the cool piece, or not so cool piece. This is a scary piece. More than 80% of fees were paid by just 9% of account holders, according to the Center for Responsible Lending. 9% of people paid 80% of 11 billion, right? So you do the math of how much they paid, and then, take a look at what's going on. And so here we go. Large U.S. banks took 11.6 billion in overdraft fees out of their customers' account last year. 9% of account holders paid 84% of the overdraft fees, according to the review. Those customers tend to carry low balances, averaging less than $350. And, these are the people that they're not bad people. They're just not earning enough. They're not getting enough income because of what is happening around the world and the whole inequality about the jobs and who does make money, who doesn't make money. Because, if you are a central banker and or closely related to them, you can print money at will, right? And so it's not a problem for you. You can just go out and print as much as you can. And then those that are closest to the Fed, known as Cantillon effect, those that are closest to it, right, like the buddies, they get these freshly printed dollars that ends up boosting in. And we're still relying on this stupid thing called the trickle-down economy that doesn't trickle down. There's no trickling. It stays. It might shift a little bit, but by the time it reaches you and I, there's nothing there. And so, of course, the income has dropped. People have lost jobs. So where is the money coming from for folks to be able to do stuff? And so you don't have enough things. And of course, you have the lower balance, and, you have to pay the bills, and then, money's not coming in, and, it happens. But the banks are basically going in and charging these ridiculous fees for just about everything when there's absolutely no need for something like that. But it's another way for them to actually boost their bottom line. And, they're basically, it's just another way for them to make income. Now, repeated overdraft can trigger account closures, amplifying problems for low-income consumers. In the worst case, banks used overdraft fees, typically $35, to strip all the money out of the low balance account and then closed it, leaving the customer without access to banking service. All right, let's really think about this stuff because this is quite silly and quite ridiculous. It's one of those things that I'm like, how is this fair? But you know what? In a world of business, it's not necessarily about fairness. In this particular world, it should be about fairness, and there are companies that are focusing on that. So let me rephrase. Some of these big banks, they have been living very, very cushious life where they didn't have to change practices, because in order for you and I to be able to do anything, to have a business, to do any work, to pay our bills, to do just about anything, we have to have a bank, right? Like even going out to get paid. So you get a job, right? You go out to the employer. Employer actually prefers to just direct deposit into your bank account. And yeah, it works really well if you have a bank account. But what happens is that some people don't even qualify for a bank account, or maybe you've been charged all these fees and now you're shut down. So now you have to go to the employer, get a physical check. But because you don't belong to the bank, the only way that you can actually cash in that check is to go to the bank, and they will charge you a freaking fee to basically cash it. And if you don't go to the bank, then you have to go to the cash or the check cashing service, which is 10 times more. So it's like a lose situation. When we're talking about fairness and equality, that is a huge inequality that is affecting individuals, that not by their own choosing, but because of the way that things have been set up, where the jobs, are super low in income. Everything else has spiked up in price, and they're literally getting squeezed by the minute. And now they can't even have a bank account. And even if they get a job, like I said, how do you access that cash? It has to be in a check, because that's what businesses and companies are doing. But I believe that that's not going to stay for forever. That is going to change, because another thing that is happening for me as a business owner, I am actually not quite happy with vast majority of my banks. I actually have multiple banks because I absolutely refuse to rely on one single bank. That's called redundancy. I do this for my personal banking. I do this for my business banking. I have multiple bank accounts, and they are in different banks. So it's not like Bank of America and I have 17 accounts in Bank of America. No. I play around within the banking system quite a bit, and I engage in multiple bank accounts. I want to say I probably have over a dozen bank accounts that range from large public companies to smaller ones, and now also looking and switching, probably less than a dozen. Maybe I made that up, but pretty close to it, to be honest, between personal and business accounts. So, from smaller banks to community, to credit unions and community banks, to large banks. And then, of course, I'm looking to get into this FinTech companies and digital banking, as well as the decentralized finance banking, and be able to save both, fiat and crypto. And, of course, like borrow, lend, and do all of those things as well. And I don't think I'm the only one. I think we're going to see a rise in that. So let me show you the next article that I was able to find. And this comes out of the FinTech Times, which is actually, I just recently have discovered, I'm sure that they existed well before my discovery, but I just recently have heard of them, and I'm definitely enjoying what they have. So I do highly recommend you take a look. But look at this. 41% of businesses plan to scrap banking provider due to slow support. Whoa. Okay, this is one thing that I did discover with FinTech. So, hey, FinTech, if you're listening, if you could fix this, whenever you click on just a little bit of a scroll, it just, boom, it changes. So it doesn't scroll slowly, it just shifts it. So, hey, FinTech, can you fix that? Because I struggle with it, but maybe some of the people like it. 4 in 10 businesses are planning to charge. Hold on, let me see if we can make this a little bit bigger. There we go. Now we can see what's going on. You can read along. But 4 in 10 businesses are planning to change their banking provider due to slow support. The data, which was obtained via a survey of 200 business decision makers in large and medium-sized companies, and conducted by independent polling company Census-Wide, also revealed that 42% admitted to waiting over 2 weeks for business loan application from their current banking provider. Additionally, 46% have noticed significant delays in their bank's onboard process since the start of lockdown. Okay, we're going to pause over here for a moment. 42% are waiting over 2 weeks for a business loan application. Yeah, it takes forever. This is where I believe that decentralized finance is going to take a hold, because while it's still young, while it's still developing, while we start learning about all these different things, you can get business loans as a matter of seconds. Seconds, guys. Seconds, not weeks, not months, not even minutes. In many instances, it's instant loans that you can get, and you can get them. Right now they're doing a lot of different things of what you can do, but they're starting to move into the collateralized, and probably they're going to be covering the or the non-collateralized loans as well, where you as a company have actually heard this from one of the channels, and I can't remember exactly who's doing it, but I'm sure you can find it. There's one of the companies that is actually looking to help businesses get loans faster, where they can put their contracts and accounts payable and that kind of stuff, the invoices, into as a collateral, and pull cash so that they can remain liquid while they're running and operating stuff. That's huge. Liquidity is the number one thing you need in business, because once you run out of liquidity, you might as well shut the doors down. So this is the reason why these companies were even looking to borrow money, so that they can have this liquidity to be able to operate and pay the employees and pay the rent and do all of those things. And when you have to wait for 2 weeks, you're getting squeezed, and that's really, really hard and rough. And I think many companies will start looking for alternative ways. And I do believe that DeFi and FinTech are going to come in very importantly and help change the world. And we're going to talk a little bit about some of the projects that are happening in just a moment. Now, 46% have noticed significant delays in their bank's onboarding process since the start of a slowdown. So because banks are cutting their employees as well, you don't have as many. They're not ready to go digital because they're stuck in the 1970s or earlier and are operating in the same way. But the world has moved on. The world has absolutely moved on. You and I are living on one of these things, and I'm charging it, so I got it yanked, right? And so we're relying on that kind of stuff, but the banks are not ready. Well, this is where the new companies will come in, and I believe we will see a huge shift, not just in the financial system as a whole and how we think about money and how we behave around money, but I think we're going to see a huge shift in what exists when it comes to companies and how they're being created. Now, let us continue, and then we're going to switch. Almost half, 49% of business decision makers also revealed that their bank has yet to directly offer financial support during the COVID-19 crisis, and 40% agreed that their bank's online digital service and support around COVID-19 has been poor. Like I said, they're not ready, and they really could care less about you and me. Now, they might put out there that we're like, yeah, we're in this together. Yeah, we're supporting it. But when you go out and you try to actually get some of the support, it's crickets. It's absolutely crickets. You can click on that button all you want. It's not connected to anything. It's disconnected. It's just pretty. It's just an ad. It's just a way to get more people to come in their way. But, they're not doing any of that stuff. Okay? It's not connected. Now, here's the part to give you a little bit of hope, because this is very, very exciting. The fact that I was able to find this article and read about it, and it's called Varo Money Raises $241 million as it moves closer to becoming a national digital bank. This is super exciting, y'all. I don't know how you feel about it, but let's take a look. Let me show you what it is. And I have tried. See, with Forbes, whenever you try to actually make it bigger, it keeps making it smaller. So if you know anybody of Forbes, or Forbes, if you're listening, can we fix this, please? Because I can keep on zooming in. It only makes photos bigger and the text stays the same size. Varo Money, the mobile banking startup, raised $241 million in venture funding. And it talks a little bit about how and why. Since the onset of COVID, we've seen an acceleration of consumers adopting digital banking. surge in deposits and a huge surge in payment activity and a surge in consumer accounts. This is all coming from the CEO of Varo, what they're seeing. And it makes sense, right? Like, you're not going to the bank. You just want to take a nap. Boom, boom, boom. Like, I love the fact of what technology does. Before, some of you may know or may not know that, a lot of my income comes from rentals, right? And so I would have tenants, and they would typically have to mail a check, and then I have to wait for sometimes even a week for that check to come in, and then I have to open the check, and then I have to go over to the bank and deposit, and then I have to wait for a few days to clear, and then finally once it clears I can get it. By the time I get my money, it's like 15th of the month. So it's fine, you set it up that way, it works. Then, nowadays you have the banking where you can actually do digital deposit, or if I get a check, I can snap a photo, boom, it is there. But with the onset of some of the digital stuff of what's happening, Venmo, for example, cryptocurrencies and that kind of stuff, and I'm pretty liberal as far as what I will accept as a rent payment. Just about anything that I believe is money, I will take. And so it makes it super simple where folks don't have to, write checks and mail and do all of that stuff. They don't have to deal with a bunch of those things. Like, they can just press a button and it's instant. And I absolutely love it. So the world is going digital, y'all. And it's only time before everything becomes even more digital. So the FinTech has made moves during the pandemic to position itself as a destination for the underserved. It provides direct deposit customers with early access to stimulus and unemployment funds, increased deposits and ATM limits, and has linked partnerships to help customers find jobs during the pandemic. What? Right? Like, how cool is this? And I just learned about it this morning, so I'm definitely checking out Varo. I am not affiliated with them, y'all. I have no clue. I'm just reading the article, but it excites me a great deal to see that the company is very committed to help people, right? To make it easy, to make it simple, to serve those that nobody else wants to serve and that everybody wants to serve, and to help people find jobs. Like, does your bank do that? Do they, like, say, we know you lost the job, and let us help you find one? No, my bank hasn't done that. None of my banks. I told you I have multiple banks, not a single one. Varo is not one of them, but it might be in the future. But none of them have reached out and said, you're struggling. Can we help you get more, more money or find a job or any of that stuff? None of them have done that. Varo is in the final stages of landing a national bank charter. This is huge, absolutely huge, and is going to transform the world of banking like you've never seen it. They're basically waiting a sign-off from the OCC, FDIC, and the Federal Reserve. Once that happens, which the FinTech expects this summer, Varo will move beyond savings and checking account, offering credit cards, loans, and other savings products similar to how traditional banks operate. What is driving growth and investor interest in Varo is zero fees and higher interest rate on savings and digital tools designed to help people improve their financial situations. Varo is going after millions of consumers that are largely ignored by the big banks. And you know what? I think Varo is going to win, and they should win. It will be among the few to operate fully digital bank. Varo customers save on average $350 a year on fees. This is huge. So you don't pay any fees, and you get higher interest savings rate. That is amazing. That is amazing. Like I said, I definitely have to check them out. Varo said the funding will go to add new employees and invest in partnerships, including Progressive Insurance, which is among the new investors to participate in the round of funding. So I think that this is fantastic, absolutely fantastic, and I'm really excited to see companies that are starting to emerge, and I'm sure that there's more companies out there, and if you know of them, hey, hit me up in the chat, and we're going to converse right after the live stream and hang out, or if you're watching this as a replay on YouTube, you're missing a lot of the show, y'all. But you're watching, and that's important, and you're getting information that potentially you're not seeing anywhere else that can help you shift and improve how you actually make and preserve your money and how you operate as a business or as an individual as well. So, then let me know in the comments, and make sure you do subscribe to the channel, and do consider, highly consider, to come in and check out the live show and join me live every morning, 7 a.m. We go live right here at onedealaway.com. All right. Final article of the day before we actually stop the replay portion and just switch over to the chat is DeFi will do to banks what the internet did to newspapers. I agree. I absolutely agree. And we are actually, because I'm looking at the time, we are going to cover this in more detail. So if you're interested to learn a bit more about how and why DeFi will basically take care or shift, not just take care, but shift over what's going on with the banking. And we're also going to take a look at some of the reports and stuff that are coming out of IMF, of what's going on with the global economy, and of course how you can invest in DeFi and kind of what's happening. The final piece that I do want to invite you to consider is we've added something new, brand new to our website. So even when you go to onedealaway.com, we actually added a ticker symbol right here. So it's going to basically be scrolling and giving you, I believe it's the top 50 cryptocurrencies as they're trading. So if you're wanting to learn, we're going to be adding quite a bit of cool tools and toys and everything else that is happening. I'm really, really excited about the progress of the website, but you'll be able to see many things, and this is just on a homepage, so you can get all kinds of different things. Of course, there's new ways, new blog things that we're posting, and we're going to actually probably start streaming some of the news and additional pieces. So I'm really excited about the progress of the website, and so I highly encourage you to come and check it out. And the cool piece is we've actually are in many ways partnering kind of with CoinGecko, so to speak, partnering. So as you will notice, if I go in and go on a ticker, it actually kind of stops. Pretty cool. And if I want to deeply explore of what's happening, so let's take a Augur, for example. It takes you to CoinGecko, where you can actually then get all kinds of additional information about it, including being able to invest in it. So I'm really excited about what we've been able to bring to One Deal Away. And like I said, we're going to constantly keep on adding stuff. So I'm really excited for what's going on. So do come check it out. Let me know what you think. Do you like the streamer thing? Or not? I personally am a big fan because it gives me a quick in time what's going on with the market, so that I understand and I can monitor these stocks. For example, like stocks, these cryptos. See, my brain is still wired in the old. EOS is up almost 4%. Super excited, but anyways, so there you go. This is what we have covered today. I hope you have incredibly amazing and productive weekend, and or at least Saturday, because we're going to see you back here, onedealaway.com/live tomorrow morning at 7 a.m. where we're going to cover some of the concept. Like I said, we're going to talk a little bit more in depth about what's going on with DeFi and how it can help you actually, not just what it's going to do to the banks, but also how it's going to it's going to replace financial planners. And so if you have a bank, if you are a bank, if you are a financial planner, or you work at a bank or for a financial planner, tomorrow's episode is going to be huge, and you absolutely cannot miss it. You have to come in, join me live, 7 o'clock in the morning. We're going live tomorrow. You get all the news. You can sit in your bed, sip on your coffee, and listen and learn and protect yourself from what is going to come that is going to disrupt all of the industries. And for those that jump in early, it has a potential to make you incredibly wealthy. Thanks for watching. Until next time, stay forever money blessed. And do remember, you are only one deal away.